This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, even though we do have these geopolitical events, which normally would be a bearish influence, and yet stock index futures putting in some very good performances as of late. Also, we did have the consumer confidence report coming in stronger than expected, so that also supporting stock indices. Earnings also coming in better than anticipated, and that seems to be dominating some of these other factors. So from here, I would expect higher prices today and higher prices longer term. Also, we do have the Fed meeting today and tomorrow. Most likely, the Fed will announce a further tapering of their quantitative easing program by another $10 billion, taking it down to $25 billion. At least that is the consensus view, which is what we would also agree with. The consensus view remains that the Fed will raise interest rates in the middle of next year. Our feeling is that they will not be able to raise rates until the following year, which is bullish for stock indices. The longer that the Fed will hold off, or could hold off on raising rates, the more bullish the stock index outlook remains. Over in the currencies, it's the flight to quality influence that is dominating currencies, taking the dollar index higher, most of the other major currencies lower. We even have the pound under some pressure, even though UK mortgage approvals increasing more than anticipated. Some pressure in the yen after retail sales in Japan coming in weaker than anticipated. We feel that longer term, the pound will continue to gain on the euro currency. We feel that the yen will probably come under some additional pressure, but in the dollar index, I think I would stand aside as the dominant influence remains the geopolitical events. So hold off on doing anything in the dollar, at least for now. Over in the credit markets, we have some new highs for the move in the 30-year bond, with the flight to quality influence dominating today, taking treasuries higher. Still feel that this is a trend that will be a very long-term trend. So continue to trade this market from the long side, and any further gains should be led by the long end of the curve, the 30-year Treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.